So recently I came across a book called The Model Thinker by Scott E. Page. What you need to know to make data work for you. So before we start, I just want to celebrate another success story where Daniel has made 70% from Facebook. Congratulations, Daniel, for investing in Facebook during the dip. And using options, Daniel is able to multiply his profit, and he made 70% as of the time we're speaking right now. So he's planning to take profit soon. So congratulations, Daniel. Keep it up. If you are aware of my profession, I'm a CPA and I'm also a data scientist, and I work with big data all the time for a variety of reasons. So I came across this book from in the library, and I actually bought it on Kindle. So that's why you're seeing that I have it on my phone. So I was reading it, and something actually intrigued me that I want to share with you. And one of the lessons that he taught was instead of relying on one model, which is what people used to do, you want to use multiple models. So for those of you who are not familiar with data science, a model is kind of an abstract way of thinking about something. So for example, when you're looking at a trend line within a set of data, that is a model. If you're looking at a curve line, which is like a power curve, that is another model. So instead of using a trend line, or just using a power curve, or using a network model, or certain other models, using multiple models will enhance your decision-making ability. And that really resonated with me because that is exactly how I invest in the market. When you are looking at investing, when you're looking at data science, when you're looking at solving complex problems within a society, oftentimes you can't just use one model. Because if you just use one model, like a cost-benefit analysis, there's going to be some blind spots that is not captured within the model itself. So let's take cost and benefit analysis as an example. So let's say you're trying to make a decision for an environmental project, which is very common, like you're building a wind turbine on top of a mountain, whether that is in Europe or in America. So you will look at the benefit, which is the amount of electricity generated, and the cost, which is the cost of the wind turbine. So if the benefit, which is the amount of electricity generated, is greater than the cost, then this project is a go-ahead, right? So that is cost-benefit analysis. But if you're just looking at that alone, then you will lead to some blind spots. Because then if you compare that wind turbine to something else like burning fossil fuel, then, well, obviously the cost of burning fossil fuel is a lot lower. And the benefit, or the electricity provided by burning fossil fuel, is the same or higher. So then, if you're just looking at that without considering the big picture, you can easily decide that, oh, we should just burn more fossil fuel. But our intuition knows that that is not the correct decision, because if you build a wind turbine, you have less environmental impact, you have less carbon, CO2, carbon dioxide emission, and over time, there's going to be less pollution and there's less global warming. So these are not necessarily captured into the cost-benefit analysis when people are making the decision. So that's why you need to apply multiple models when thinking about complex problems. And that's exactly how I invest. So one of the interesting things is, where did I learn this concept, of using multiple models to invest in the market? And I got to give credits to Warren Buffett. And I actually got one of his book called The 9 Recommendations to Small Investors from Warren Buffett. It is a book in Chinese. I searched, you actually can't get it in English, so you just got to rely on my word for it, unless you can read Chinese and go get that book. But essentially, what he said is this. He said, when I'm investing in the market, I don't focus on really complicated models. So he doesn't do algo trading, he doesn't do AI modeling. Instead, he focused on using simple models from different faculties. Now, what he means is this. He'll think about the stock market from a psychology point of view. He'll think about the stock market from a financial point of view. He'll think about the stock market from a news information point of view. He'll think about the stock market or the company from a strategic point of view. And he'll think about the stock market, from interactions with other players like the suppliers, the competition, the customers, so on and so forth. So then he has a complete picture, or as complete as possible picture to make a good investment decision. And if you kind of follow Warren Buffett's track record, you will know that he's quite a successful investor. And for myself, I personally also use this kind of thinking approach when it comes to investing. So instead of using a very complicated algorithm trading style, which I actually tried many years ago, I focus on using very simple models and combine them together to understand the entire picture. Now, if you are studying finance in school, it is called the Mosaic theory, where there's a lot of information out there on the internet or in the world, and it's your job as the investor to kind of piece together all these little bits of information together to make sense of the company, of the world that you're investing in, to understand right now whether it is a good decision or not. And Mosaic theory, it is so important because on one hand, you have people who don't know how to invest at all. They're just making decisions blindly. They have no investment strategy, no way to manage their risk. And on the other hand, you have people trying to mathematically calculate the movement of every single tick in the stock market, which is the algorithm trader. And in the middle, you have investors who try to combine knowledge from different faculties and piece together one big picture called a Mosaic theory. So that's who I am. That's actually where I sit within the spectrum of completely technical to completely winging it, I would say. So how are you investing in the market? And what do you think of this book, The Model Thinker? So if you want to pick it up, I will just show you the title here again. So you can pick it up if you want to. It's by Scott E. Page. So if you are watching this video, Scott, you're welcome. I featured your book on my channel. So it's a pretty good book. I'm still not done yet. I'm actually just around, 10 pages in? And I already got so much value out of it because it's changing the way I think about data, changing the way I think about investing as well. So I'll see you in the next video. So thank you for watching, and I hope you enjoyed the video. Please help support me by subscribe, and you can watch the next recommended video here as well. So I'll see you in the next one.